The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to start the show today with the U.S. dollar index. I believe we are at the proverbial moment of truth in this index. If you get a chance to go into Tiger TV, you'll see that I've posted it going back the last 6 months, and it is just about a perfect symmetry of Fibonacci numbers and patterns that you could possibly ask for. The low that we made back on the full moon of June 23rd was an exact 786 of the low that we made back in February, on February the 1st. And then we went up and we made the 1, 2, 3, 4, 5 expanding triangle, also known as the reverse point wave. Since that pattern has formed, we've now come down. And for the last 3 days, we've been setting at the exact 61% retracement in the dollar index at the 8,200 level. And as long as we stay above 8,200, this head and shoulders pattern is certainly in effect. You can see it quite clearly. It has a beautiful symmetry, everything you could possibly ask for if you like pattern recognition, and this old cowboy certainly does. So this is exactly what we're looking for. So we're expecting weakness coming in the euro and the pound and the yen, and of course the Australian dollars and a few of the others, but mainly the euro, because that's 53% of the U.S. dollar index. Many folks don't understand that the euro is so heavily weighted in this index. It's really quite amazing. As a matter of fact, if you take the dollar, the yen, if you take the yen and the euro and the British pound and the Australian dollar and Canadian dollar, I think you cover about 75% of every index cross rate that's in there, and there's a whole bunch of them. But they're all minor, so they only take a few percentage points as far as the weighting goes. So, and that's a problem that you have with an index. We already know that with the Dow Jones, because it's price weighted, it's not cap weighted, and so you get 30 stocks. And like today, you can get a stock like Caterpillar that's under a great deal of trouble because of earnings, and you get another stock like Boeing that's doing pretty good, and it evens it out because they're both stocks that are relatively high price, but because Boeing is a higher price than Caterpillar, it's price weighted. It's not cap weighted. So that's a huge difference in those particular things that we're watching. Now, since we were talking about currencies, I wanted to spend a few moments going over the euro on a little bit shorter time frame here, because it is making some incredibly harmonic moves here on a short-term basis, and that's what we try to do when we trade, is to put them into context that we're able to see that we're coming into an area where we should come into some pretty steep resistance of some kind, and that's what's happening right now in the euro. We're having the euro, when you look at it on the U.S. dollar euro cross rate, we posted that into Tiger TV, and it shows the big ABCD pattern that occurred up here at the 130.260 level, and then since that time the market has broken about $500 or $600 and has put that top in, at least for a short-term basis. It might not work, but these are the ones that you try to have patience to see if they unfold. At the same time this was happening, that's when the U.S. dollar index was just ticking near that 82 level, and that was giving you further confirmation that the 618 on the dollar index was coming in at the same time that we were looking at the index at the cross rate in the euro versus the U.S. dollar. So that's it. I have already had a question about the U.S. stock market. We've been hovering up at this level for since last Thursday. We've been in the same level since last Thursday, and we haven't really gone any higher. The New York Stock Exchange Index has still not made new highs, and so as far as I'm concerned, the high came in on May the 24th. And I'm going to stick with that until that's taken out. because that New York Stock Exchange index is the biggest index of them all, and it's cap weighted. So each of those stocks go by their capitalization and their price. So it's a big difference of what we're watching here. Now, there's other currencies, of course, in the crosses, but I know that most of the folks here at the TFNN are not forex traders, so I'm not going to cover all of them. But I did want to cover one that is really important because it's not heavily weighted, but it's the second most heavily weighted index in the stock index, and that is in the dollar index, and that is the Japanese yen versus the U.S. dollar. And I think that's the one that we've been looking at for quite some time here, and we've had a really interesting move here overnight. We rallied up exactly to the 61%, the 786 retracement. We made a really nice Gartley pattern at that point, and so far, we've been moving to the downside, which is what we would expect if this is the type of pattern that we were looking at. I'm going to post it again into the room for the folks to see if they get a chance, is because it's such a beautiful pattern, and it makes a very long-term head and shoulders pattern going back from late April into the head, which occurred on the 22nd of May. A lot of things happened between the 22nd and 24th around that full moon that we had on May the 24th, and that makes the right shoulder stopped exactly at the 786 at the 101.60 level, and we've since broken more than $3,000 from that level and then rallied back 1,500 of it. So we have a real active market in the dollar versus the yen, which is what you really like to see, because it gives you a lot of opportunities to go either long or short in the currency markets. Remember, the currency markets trade 24/7, starting at around 5 o'clock in the evening on Sunday, and they go through till about the same time on Friday night, 24 hours a day, 7 days a week, and they're usually pretty liquid. There are times right after Asia close and before New Zealand and Australia opens up that the market's a little bit thin, but it's still tradable if you're not doing multi-million-dollar transactions. But for the small traders, it certainly is, a beautifully trading market for well over 22 of the 24 hours a day. So it's a really a good one to look at. Now, the next one I wanted to cover is the gold, because we're having a pretty severe correction in the gold market. If you want to call severe, it's not very much. It's only down, like $20-some from the high after moving $170 higher. But I think the best way to do this is to take a look at it on the hourly basis, and you'll be able to see, the incredible run that we had, in the gold market. We've gone from $1,177 an ounce all the way up to $1,348. And so we would be expecting a move potentially $50 to $70 lower here in the gold market. However, if the gold decides not to react very much from this point, we're going to be looking at much higher prices in gold. Remember, when we hit that low down there, this was a long-term weekly number in the gold market. That was the 786 on the weekly basis, and that went back it was a 50% going back to the 2008 low, and it was a 61% retracement coming off the low of 2009. And so this is a very, very important rally that we're having in gold now. And when we have this test that we're going to be receiving very shortly, because we're down just $20. We haven't had more than a $20 correction after we made the 61% retracement at $12.12 per ounce. We ran up from $11.77. We rallied over $100 an ounce. We came back to the 618 at $12.12, and since that time we haven't had a correction more than $25. So today's correction at $20 is as much correction as we've had over the past 3.5 weeks. So it's telling us that there's some buyers stepping in to the gold market, and that makes it a very interesting situation in gold. You want to look to be a buyer there. Try to find the ABCD patterns on your hourly charts or your half-hour charts to try to find a good entry point to try to enter the gold, because it certainly looks like it's got a really good chance to to have a pretty nice move to the upside. So that's what we're keeping an eye on with that particular commodity. Now, this is not the commodity show, but everybody at this TFNN loves gold, because I've been with them for a long time, and that's one of the things we always cover. It's one of the best trading vehicles that you could possibly have, and it's really a fun thing to trade because it follows the patterns and numbers so very well. As a matter of fact, I wanted to just take a break here from the longer term weekly. We'll just move down to the shorter term, just to the 5-minute chart, and you can see some incredible moves that we've had in gold just in the last 4 days. We've had a beautiful ABCD that measured exactly to the high at 1348. That was a 1.618 expansion of the BC leg. I mean, that's a perfect AB equals CD. You cannot draw it any more perfect. It's to the exact penny. And this is a contract that trades for $134,000, which is a considerable amount. But it's tradable, and the margin is rather steep. It's $10,000, but you can trade it for a day trade, for half margin, which is $5,000, as long as you use a reasonable stop. And we think that $8 per ounce is a reasonable stop in gold. It could easily be traded, because as you can see, after the high was made at that $1,348 per ounce, we had a series of 3 lower highs. I mean, each one of them was a retracement of the previous high, either the exact 786 or the 618 of the previous high. So you were in a downtrend, because on short term, it was a downtrend. It was doing exactly what happened during the 2-day correction that we had during July 22nd and July 23rd. So this is why we watch gold so clearly. We believe that we're going to have some pretty good support, probably around the 1,300 level per ounce, and the reason for that is that's where the big breakout really took off from, and that was Sunday night, when the market moved so dramatically to the upside, when it opened and rallied $20 per ounce, and it never looked back. I mean, it's just been been going up straight up since that time. So usually when you have a breakout like this, there's a tendency to market to go to retrace back to that breakout level one more time, and that's the key to be when you're watching this, is to try to do that. Now, if you wanted to look at it on a Fibonacci basis, you'll see that from that low we made at that 1212 level, the 61% retracement could take you all the way back to the 1260 level in gold. So there's a potential that it could do that. So we're going to take a little break here. When we get back, we're going to cover the stock of Apple Computer.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we are going to talk a little bit about Apple. First, we've got a caller coming in from New Jersey. Victor, are you there?
Yeah, first thing I want is corn. There's an ETF called corn, and on the point and figure it says it's going down to $30 a share. Right now we're at $37. So give me your Fibonacci and your guesswork on corn.
Okay, now corn, is that an ETF for the future?
Yeah, it's an ETF, but I also see corn's been getting hammered lately. We're below we were last June. What's going on with corn? Where's that guy that comes on here?
Well, there should be some support in corn around 480 per bushel, but once we broke below 502, that told us that we were in big trouble. Now, what we're looking at here on corn, your ETF, which I'm not a big fan of ETFs, as you know.
No, I'm not either, but it's the only way I can play it.
Oh, okay. All right. Well, let's take a look at it here. I'll just look at it on.
After that one, can you do Intel too? I want to see what your thoughts are.
Intel? Yeah, absolutely. Sure. I have a friend that's on the board of Intel, so I certainly would do that. I would look at the corn down here at about $36.50 a share, about 25 cents from where it is right now. That's what I would be looking at. I wouldn't give it any more than a $0.50 risk at that spot. So the actual corn contract itself, if you get a chance to listen to the show tomorrow, we have some really strong support coming in at around 480 a bushel. But, you know, it's going to be a short-term trade. It's hard to believe that we're not going to get at least one crop scare between now and October. You know, that's what I'm thinking of, Victor.
Does the dollar affect the price of corn or not?
Not not too much, because corn and soybeans are basically inelastic demand. They have to be used no matter what price they are, because they're used all over the world, especially soybeans. They're definitely inelastic demand, because you can't get away from using soybean oil and margarine and all this, and paint and all the other stuff. So that's pretty much inelastic demand.
You think that point and figure chart is accurate? It's pretty good. They're pretty accurate.
Yes, point and figure
going down to 30, so that's going down to 2011 prices where you had that.
It can easily do that. Now, I'm a shorter-term trader than that. I don't want to take the risk between 36 and where it's trading now, 36.74 and 30. So I'm trading the futures, so I can risk $250 in that, which is about 25 cents on your CORN. So it's much easier to trade the futures than it is the ETF.
Mm-hmm.
Okay. Now, you wanted me to take a look at Intel for you?
Yeah. It pays a pretty good dividend, but where do you think it's going?
Well, the dividends, the problem with that is they can take those away pretty quickly. That's
I've been checking. It's been going on since 2008. They've been giving it out.
Yeah, that's for sure. Well, as the Intel made a major major ABCD top, way back in January, up at $29 a share, and then it had the really bad earnings. And then we rallied back to a 61% retracement at 25. There should be really good support, about $1 from where we are right now. It's at 22.93, and the 61% retracement of this last move from November of last year to where we are now would take us up to around $21.50 a share in Intel, where we would offer a low-risk buy. And not only that, but it was right near where the gap was filled at that point. So that's what it was. We've had Victor evidently got disconnected, but hopefully he'll be able to listen to the show later. But that's what we're looking at in Intel. When it made the high up here just back in June, it made a beautiful Gartley pattern. My goodness, it was spot on at the 61% retracement, and it really did a nice job at predicting that top. And since that time, it's dropped well over 15%. And it looks like we're going to get down to around 21 something in Intel. But it's a very nice tradable stock. If you get a chance to go into Tiger TV and take a look at it, you'll see since 2012 you could just trade the ABCD moves, and you would have been spot on to most of those patterns, just really, really closely. And especially the top up there when it made the big ABCD pattern from April, through October, from September to April, it made a monster ABCD pattern where it went from 19 to 29 and topped within 25 cents of the exact D point, and then lost almost all. Well, it lost all of that gain and went back and made a double bottom. So that's what we're seeing in Intel at the current time. Longer term on Intel, if we took a look at it on the weekly basis, which I don't look at very much, you'll see the same type of a situation here. I've got to clean the data up because I don't see there, we put it in here now. We got to take a little break, and then when we come back, we're going to cover the stock of Apple.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we're going to be talking about Apple Computer here. We've had a couple of inquiries because of the news that came out about their earnings last night, but we're going to basically look at it on a technical basis, and we're going to go back to the high that we made back in May at the 465 level. The market came down and made a double bottom down at the 388 per share level. And since that time, we had a beautiful AB equals CD pattern, and the BC swing was exactly 382, which happened at the 410 per share level, and that finished today at 444. And the high on the Apple today was, I believe, right at 444, as I recall seeing it here. It was 444 was the high on Apple today. So we're going to see what the what's going to happen from this 444.47. So it measured perfectly. But if you take a look at this pattern really closely, you'll see that that's the 786 off of the high that we made back on on May the 28th, and it's also a number coming off of the high that we made at the 465 level. And then if you look at the shorter term pattern that has been occurring over the last 7 trading days, you'll see that it's making that expanding triangle, that 5-wave reversal pattern coming at the same time. So right at this level in Apple, you have like 5 things to tell you to be short Apple here. If you were long it, you certainly want to be out of the stock because it's reached every objective that we can see. And if you wanted to short it, you have so many things that's telling you that this is where you want to be shorting Apple, and you wouldn't have to be risking very much because 444 was the target. If you took 1% of the price of Apple, which would be about $4.50 a share, that would be your maximum risk on this, and your first profit objective would be at least $20 a share. So that's a very good risk-reward ratio, in my opinion. But the things that make it a good short are the fact that it's made a perfect ABCD correction over the past month, starting on May the 29th, ending today, exactly at 444. We have the expanding triangle that Gartley called the T6 pattern. That's the 1, 2, 3, 4, 5 reverse point wave stopping at 444. The 786 stops at 444. So it's got a lot of things that tells you that this could be the place where you want to be looking to go short Apple. It's hard to believe that this stock at one time was trading above the $700 level, and I wanted to bring that up one more time just to remind folks of this, because we're all susceptible to news and everything. There's no one that's not. It's just almost impossible. But if you look at the long-term daily chart on Apple, you'll see at the high that was at $703 a share. It stayed at $700 a share for 5 straight trading days. And if you'll remember, we've talked about this many times, Basil has, and also myself, and even Steve Rhodes has mentioned it, that when it was making that high up there were 33 analysts on Wall Street, and not one analyst was bearish. Not one. They were 33 bulls, and the price ranges from anywhere from $800 to $1,200 a share when it was trading at $700. Now, I don't think we have that many bulls left. Out of 33, I don't know what the thing is now, but the thing to remember is when you've got everybody on one side of the market, whether it's in gold or silver or pork, well, they don't trade pork bellies anymore, but whatever it happens to be, if you got somebody on one side of the market, you got to ask yourself, who's going to take the other side of the trade, and that's where the problem arises. On Apple, it gapped down on the following Monday after all those 5 days hanging up there, leaving an island reversal, which is one of the more bearish patterns that you can possibly have. It's also a bullish pattern when it gaps up, and those are the things that you want to keep in mind when you're watching these. As a matter of fact, as I'm looking at this chart, on the daily basis, I'm going to highlight one of these island reversals that we had back on the bullish side, and then we also had one on the bearish side up at the top, and I want to put both of those in so our viewers can take a look at them, and you'll see that these were valid patterns that we're looking at. Oh, we got a call from our friend Danny in Atlanta, Georgia. Danny, are you there? Danny.
Hi, Larry. Can you hear me?
Hey, yeah, just fine. You're coming in, my friend. What can I do for you?
I wanted to point out that tomorrow is options expiration on August gold, and we frequently make a low on that. And also, the last correction we had was $30, and if you do a retracement from the last low we made on August 17th to the low high we made yesterday, that would be another $30 correction at the 382 retracement. What do you think of that?
That's the number that I'm watching. I'm watching that 382 coming off that last move, and that would take us down to about $12.99. I think, well, actually, it's actually 1318 is the first number that I'm looking at, because if we only retrace to 1318, gold is going to have one more big leg in it before it makes any correction at all, in my opinion. So we've got several numbers coming in at 1318, which will be certainly easy to watch.
Yeah, I just wanted to point that out to everyone in the den.
Well, thank you. I'm glad you did, because we're moving the operation. We go from August, we go directly into October gold, and that'll be the lead contract now. And, of course, we cover that on the commodity show on Thursday. But it's important when you're trading futures, that you know that these expirations come up. Fortunately, with the people at TFNN and in the den, and also in the chat room that they have, is really they give you some great information. And I know you're in there, giving information too. And so it's great, to have people to fall back on that you're able to do this. And it's very, very important, in my opinion.
Has it cooled off there for you some?
Oh, yes, we're in the middle of the monsoons now. We haven't had any rain yet, but the temperature has dropped from 105 down to about 92, which is very balmy for us. That'd be like 80 in Florida, so it makes it pretty nice as far as having a real easy spot to relax. Anyway, except for last night, is our air conditioner went out, and so the air conditioning fellow showed up at it was really late last night. It was about 8:30, and for us that's considerable late. And so we had a hospital that lost all their electricity. St. Mary's Hospital lost all the electricity, so all the electricians and air conditioning people in the whole city were there trying to get everything back and working, and they finally got it, and then they took care of the customers after. It wasn't bad. It wasn't miserable. It's just a little warmer than we're accustomed to.
Okay,
so
great.
it wasn't too bad.
We'll be looking to see what happens tomorrow, maybe at 13.18 in gold.
We're going to be watching it if it gets there, that's for sure, Danny. Thanks for calling in, and may God bless.
Thank you.
Okay, folks, the next one we're going to take a look at is the Treasury bond market. We have David from Clearwater there. Are you there, David?
Hey, Larry, how are you today, sir?
I'm good, my friend. What can I do for you?
I was wondering if I could get you to put up a 30-year bond on an hourly chart, because it looks like it just formed a Biogartling off of the 618 retracement coming off of the move upwards on July 10th.
It's spot on. It's trading right there right now at 134. As long as it holds this 134 level, it looks like that we've got a pretty good chance for a little bit of a bounce. And the only thing is that I'm a little bit concerned about, David, is the fact that we have a 61% retracement just slightly below that, down at the 133.20 level, and we could easily make another 12 ticks lower. So you got to be able to take that 12-tick heat if you're going to buy the bonds here. That's my opinion. I could be wrong. You could risk just a few ticks here if you wanted to, but I would prefer, to buy the bonds here at the 134 level and then put my stop, 15 ticks away, so that I have a little bit of a cushion in case it makes the 61% retracement.
Right, because that would be the 618 off of the move from the
That's correct.
Bottom at 132.02. Correct. Yeah, I saw that. I've debated on it. I'm like,
yeah.
Tough
well, I know that's
contract side, but take the heat.
I know that's the problem with trading. You've got to make a decision here and there when it's not an absolute perfect setup, and unfortunately we live in an imperfect world, and you've got to make these decisions. Fortunately, they're not a great deal of money between the two, so it's still tradable. But I do know one thing, David. If we go below 132, we're going to see some spikes in interest rates that's going to make some people pay heed. Because, these bonds are on the way down. They've been in a bear market for, well over a year now. And if we're not going to get a rally from this level, it's going to tell us that, we're looking at something pretty sinister happening as far as interest rates. But they certainly look higher to me, the interest rates.
Yeah, totally. I agree. I mean, I don't have the expertise that you have, but the charts I'm looking at are indicating, from what I can see and what I know, and what I can read, I expect the same. I'm anticipating a sort of a rally because the market's just been severely oversold for so long now. I'm anticipating somewhat of a rally back up, and use it as an opportunity to short it once again. So we shall see what happens. Larry, thank you so much for taking my call.
Listen, thanks for calling in, David. I certainly appreciate that. On that interest rate front, I was happy that my daughter was able to get a house recently with a decent mortgage because the rates were so low. It made it quite easy for her take a 15-year mortgage out at a very, very low rate, which is really a good thing. I wanted to show you folks something on the Treasury bonds that we've talked about many times, and it's so very, very important, and that is the fact that on the long-term weekly chart on Treasury bonds, and I put this into Tiger TV so you can take a look at it, the 61% retracement we made 3 weeks ago was right to the exact tick at that 132.05 level. And since that time, we've had a 3-week rally where it's basically gone nowhere. All we could do was make a 786 retracement of the previous month's high. That was up at that 135.20 level. And so if we go below 132, if you take a look at this, you'll realize that we're going to have a very, very shallow rally and then a spike below the 618. And that's what happened when gold was breaking. If you remember when gold was around 1565 and we were getting these very, very shallow rallies in gold, it was very, because it had such a bullish pattern. All it had to do was to rally a little bit, but it could only rally 2 or 3 weeks and then down hard again, breaking the previous day's lows. And those are really indication that the market is under, extreme pressure. And if that happens with bonds, you've got to be prepared for that, because if you've got a mortgage to get, or you've got to make a long-term commitment in interest rates, either with your 401k, whatever it happens to be, realize if we go below that 132 level in the Treasury bonds, a 30-year bond, that means the bond will be yielding above 4% again. That would tell us that, the rates are going to go, a great deal higher. Remember, the high on this thing was made back in May of 2012. So we've been in a bear market for well over a year now. We're 14 months into a bear market. So we're due for a rally. The last rally we had went from 140 to 148, stopping at the 61% retracement. But so far, this one hasn't moved, very much at all. Whether it will or not, we'll have to wait and see.
Wouldn't you say, to some extent, with the higher interest rates that we were probably going to anticipate would then help with strength in the dollar and help complete that reversal head and shoulders pattern you were discussing earlier?
Well, now you're asking me something that I have no expertise in. I look at the cross rates and how they react to the bonds, and they have to be there, because if rates go up, that means that people want to bring their money to the United States. So the correlation at times can be really high, near 90%. And then other times when there's this flight to quality and stuff, you don't see that same correlation. So I try to trade each separately and not try to think too much, David. That's my bottom line. Yeah.
I hear you there. Going back to the mortgage rates for a brief minute. This will go down as the trade of my life, and I want you to know, Larry, this is pure. I was watching it, but it's just pure dumb luck. I locked in. I bought a bigger house recently. I locked in a 30-year mortgage at 3.63.
Wow.
And just hard. On a 30, because I thought about it. I was like, well, if I do the 15, I can get even lower. But if I do the 30 and make 2 extra payments a year, I'm simulating the 15. And I step back for a minute. I'm thinking to myself, that is insane. 30-year fixed at 3.6. That will be the trade of my life.
Well, the question I always tell people about that is there anybody on this planet that you would loan money for 30 years at 3.6%?
Nope.
You won't. That's not going to be the case. Your family is different. You give money to your family. You never expect to get that money back. But, as far as a business decision or something, there's no one that I think would loan money at that level. And yet the government has got all the people in the world coming to them saying, yeah, we'll take all you got. And yet, they might be wrong sometime. Who knows?
I hear you.
Okay, we got to take a break here.
Again, thank you for taking my call.
Yeah, thanks for calling in, David.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to end the show here with the VIX index and also the New York Stock Exchange index, because that's the index that I follow the most closely of all the things that are out there, because it's the broadest and the fairest of all the indices, and it hasn't made new highs yet. Let's go to the VIX. We were looking back in May when the market was making that full moon back on the 25th, and the market was making a high, the VIX was making a low. We were making the 135 pattern from that level. We took off and we went straight up into the full moon of June 23rd. And now we've come down into the full moon that we had on the 22nd of July, which was the birth of the royal baby. And I'm pretty sure his name is going to be George VII. I talked to his grandfather today on the phone from London, and he assured me that it was in the top running for one of the key names for the baby. So we'll see. If you believe that, I still have 2 shares of the Brooklyn Bridge for sale. Oops, they're gone. Somebody already took them. Anyway, after we've had this low here, if you'll take a look at this chart, you'll notice that we've had a 45-day cycle that has been running in the VIX index along with the lunar cycle that is there. And so within this week is where we should be bottoming. I was expecting it to hold the 786 level at the 1350 level, but as fortune doesn't always smile on a trader, it went below that, and now we're starting to come above it. So we'll see if that's going to be a bottom. But if we go below 1120 or something in the VIX index, which is certainly possible, we're going to be looking at something that I haven't seen in recent memory, but we'll have to wait and see what really happens at that particular point in time, if we can do it. I wanted to show the chart of the New York Stock Exchange Index because I think that is the best indicator of the things that we look at, and we have not made a new high in that index as yet. We've came up and we've made a double top. And we just missed it by a heartbeat, as I recall, unless they've changed the prices on me. 156. Oh, my goodness, we did. We made a higher high. No, we did not. The high that we made in May was at 96.95, and the high we made yesterday was at the 16 ticks under that. So we did not make a new high in the New York Stock Exchange Index. And this particular pattern that we're looking at is that reverse point wave. And now we have not only the reverse point wave, but we have a double top pattern. So this is either something really big, which I've said all along, or I'm going to be working as a nanny for the new baby. So we'll see. I know everybody's making big news about that, which is fun when you got a potential for a new king. And fortunately, I won't be around when he's crowned king, if he is. So we'll see. But a lot of things can happen between the time he's born and by the time he comes to be a king. If you've ever seen the wonderful movie The King's Speech about King George VI, it's really fantastic movie. If you haven't seen it, won many Academy Awards, but it's very, very good. So this is what we're looking at. We should be turning in the stock market here. It should be quite dramatic to the downside, much like we had in May. And, like I mentioned before, Arch Crawford is so strong about this grand trine that we've had, where we had Jupiter and Neptune and Saturn all coming together at 45 degrees angles, causing this big grand trine, and that could be the thing that made this top go up. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.